Okay, welcome to the weekend video. This is bullwaves.org, obviously, and I'm going to go through the 9 markets that I cover. I'm going to go back to front as usual. First of all, let me wish you a happy weekend. I hope you had a good week, and I hope you have an even better weekend. I'm looking forward to a nice, relaxing weekend myself. I ain't no party goer no more. Anyway, the weather's going to be crap here this weekend, so I may as well stay indoors. So this is again, I'll repeat myself, is the weekend market update. And let's just take a look at what happened during the week and see what we can divine for next week. Okay, let's get on into it. This is Eurodollar. So as usual, I'll start with Eurodollar. So this is the 4-hour chart, and again, what we're tracking is since last February was a 5-wave move to the downside in a possible wave 1, which again, right now we're approaching the end of this 5 waves down. So soon enough we should expect a 3-wave recovery, and we'd be looking for recovery into the previous 4th wave, so probably about 117.50. But we'll be looking for that maybe towards the middle of September, or maybe the beginning of September. But right now we're still kind of in the throes of this 5th wave down of wave 1. So you can see wave 5 green here. So let's get into the short-term chart and see how that's playing out so far. So there's wave 5 in green. So we have 1, 2, 3 complete. I think this evening we're completing wave 4. We've reached the target that we're looking at during the week there, and we've got a pretty clear 3-wave pattern with an expanded flat wave 2. We're looking at probably a flat correction wave 3, or a complex flat, one or the other. And now that this is reached, it's definitely reached the initial target, the expected target, the previous 4th wave. So I think early next week we can look for a turn down again into a possible 5th wave, which will complete the larger pattern, wave 5. Okay, so the outlook for Eurodollar next week is continued downside. We'll see how it plays on Monday. We don't know whether wave 4 in brown is completed yet, but we'll work on that early next week. That's what we'll be working on. But the outlook is still for another drop down to complete wave 1. Okay, so let's get on to pound dollar. Again, we're tracking a large 5-wave move down out of a triangle. And we have 5 waves complete, more or less complete. I think there's probably one more little drop in pound dollar as well to complete this wave 1 in green here. And then, just like in Eurodollar, we'll expect a counter-trend 3-wave rally back up to the 130s again to complete wave 2. But for the moment, we're still looking at wave 1 unfolding. Let's get into the hourly chart here. So we've got that triangle here. Let's go from we'll go from the top of the triangle here. So that's the close of the triangle there. We've got 1, 2, wave 3. You could also view this as the low of wave 3, but we'll figure that out next week. It looks to be that we have either wave 3 complete, or either wave 3 complete at this low or that low. So one or the other, take your pick. Both of them are quite valid. I like the fact that the decline this week was in 5 waves, and we've got a pretty corrective rise off that decline so far. So we're looking at a wave 1 and 2 maybe completing on Monday. So we'll see. We'd expect a further decline in wave 3, 4, and 5 into support at about 125, and that'll complete 5 waves down. At that point, then we'll look for a reversal in a 2nd wave. So for next week, we're still looking at further declines, probably into the middle of next week. We'll see how it goes day by day on the nightly updates. Okay, so let's get on to dollar yen. This is the 4-hour chart. Again, there's two pretty viable accounts. A bullish one, more bullish one here in red, or circled in red. So we've got a wave 1 up, possible expanded flat wave 2 underway in the operating wave count, and then we've got this alternate count which says we've got wave 1 and 2 and a possible 1-2 completing. So whichever way you split this, we have a couple of short-term supports that, if they break, that'll probably confirm the current wave count, but we're still kind of 50-50 between these two. So let's get to the hourly chart and see how this decline is unfolding. The fact that we've got a definite 3-wave decline underway, if not already complete, that does hint at the alternate count, and this being a wave 2. The only other way of looking at it is maybe we've got an ending diagonal. I find that very unlikely. I'm going with the complex correction. It could either be an expanded flat or a running flat. So we'd have a 3-wave decline. So it'll be a double combination. We get a 3-wave decline in wave C. The target so far is at 108, or the low 108, so maybe 108.20 or 30 to complete. We've got 5 waves down in wave A and running flat wave B, and we're looking at 5 waves down in wave C again. And my voice is already dropping. You'd think I smoke 3 cigars a day, but I don't. I gave up smoking a long time ago. Okay, so we're still looking at the unfolding wave, possible wave C. The last couple of days have been declines again, but so far it's only in 3 waves. We need to get a break of that 110.10 level to confirm that wave C is underway. So what we'll be watching early next week is that 110.10 level first, to see if we get a confirmation of this larger wave count. And at that point, then we'll be looking at a pretty decent opportunity in dollar yen again for a rally in possibly either wave 1 of 3 in grey or wave 3 of 3. So again, we're looking at short-term supports to kind of confirm the current count and then get rid of that alternate count. Okay, this is the Dow again. So this the short-term bearish outlook was invalidated today with the break of that recent high, and we're approaching again this key resistance here. So that's the previous wave 2. So again, it's kind of, we're at a nice inflection point, I think, in the market, because with this shelf of resistance here, this resistance level at the upper 25s and approaching 26 is just, it's proving quite impossible to break, and it does kind of hint that maybe this kind of shift to let's say risk aversion among investors, you wouldn't know it, but you wouldn't know it with the bid that went onto the market this week or later this week. But yeah, there is a definite shift to risk aversion in the market. The fact that we've taken 6 months to go absolutely nowhere should tell people something. I'm still looking at a 1-2-1-2 pattern, but it's becoming more likely that this is a possible 1 and a very long wave 2, or else we have a declining leading diagonal wave 1 at the low, which completes at the low in March, and a flat correction wave 2. So either way, we're looking at a 1-2 pattern with declines in wave 3 expected. Okay, so let's get into the short-term count, and the reason, I'll go back here again, the reason I think this is a C wave is because it's a clear 5-wave pattern. So we get a running flat wave B here, and I think this is a definite C wave. Whether it's a C wave at a 1 degree higher or not is yet to be decided, but I think a C wave nonetheless, because the end of trend, you can see this declining excuse me, the declining trend line in the two measures of momentum, followed by just the price diverging from that and continuously kind of hitting a high at or a lower high in momentum with a higher high in price. It reeks of a C wave, and it's likely to catch a lot of people very wrong, or very much on the wrong side of the market over the coming weeks. Okay, so let's get into that C wave and see what we can learn from what happened. So we had 5 waves down. That's a definite 5 waves. There's no other way to count it. The only change has been in the fact that this wave 4 in grey has now expanded to an expanded flat correction. So we had 3 waves down in a B wave, 3 waves up in B, and 5 waves down in C. So either way, we were right in calling 5 waves down. We got blindsided by Walmart this week for some stupid reason. I don't know why. But anyway, the market decided to bid up prices again, and we broke that recent high, 25,698. So I still don't think there's much more left in this rally, because I can count a clear 5 waves up. You can see the hourly momentum it went off the charts on Thursday there, and is now already shut down again. We have a completed pattern, and the fact that we're at key resistance again, I think will lean in our favor, or lean in my favor, which is to view the top again, or to look for a signal that the top is in again. So next week I'll again be looking for this 5th wave to complete and 5 waves down through support. Okay, and again, that lower end of the decline early this week is the target for wave 1 down again. Okay, so that's stocks. Milling through this today, and you might even be getting bored, which is fantastic. Okay, so gold, we've got a nice little bounce after a sharp sell this week. Well, last weekend, this week. We were expecting that throw over to happen. It happened, and we bounced nicely off the low. So I think we've still got further evidence to point us towards a completing wave 2, and we should expect a rally in a possible wave 3 to begin over the coming weeks. But we need to look for a signal, and that's what I'm working on right now. Is the bounce off the low looks quite impulsive, and we either have wave 2 complete, or we're working on a possible expanded flat wave 2. The market is closing higher again, so we've broken the wave 1 high. This could be the beginning of a 3rd wave up, but we'll see. It'll take a week or two to again create the positive price action that I'm looking for in a 1-2 wave up. But we'll keep an eye on that every evening. I think it's hands off for the moment. I think we need to see a break of resistance. I think we need to see a higher low with a 3-wave decline in wave 2. So that'll probably occur over the next, well, God willing, that'll occur over the next week or so. But that's what we need to, in general, that's what we need to look out for. Okay, so let's get to crude oil. Again, crude oil, the recent high is looking ever more like the final high in wave 4 that we were looking for. I think we've got a pretty decent 1-2-1-2 pattern. I'll get the wave labels on that actually. Wave 1 and wave 2. So wave 1 and wave 2. I'm looking at a possible leading diagonal here, or wedge pattern in a wave 1 and wave 1 and 2 again. So there's a definite possibility that we have a pretty bearish signal lining up here in crude, and we have a few pretty decent trigger points also. So next week we could be getting we might see the development of a very tradable lower high, but we'll keep an eye on that. Let's get to the hourly chart, and that tradable lower high should occur, 1-2 wave. I'm expecting a 3-wave recovery now in that wave 2, up to about $67, which is the previous 4th wave. So we've got that 1-2 down, a possible leading diagonal wave 1-2 down. There's always that kind of confusion between ending diagonals and leading diagonals, and the only thing you need to look for to discern between both is the leading diagonal would have wave 1 and wave 4 will overlap. The price range will the price band, let's say, will contract, and you will have 5 waves down followed by 3 waves up, followed by 5 waves down, followed by 3 waves up, ended by 5 waves down. So you have 5 or 2 impulse wave with a 5 wave completer to complete in a 5th wave. So you'll have 5 3 5 3 and 5 in an ending diagonal, which would be the opposite, which would be it can be a wave 5 or a wave C, but it'll be at the end of a trend. You would have all of the internal 5 waves will be broken into 3, a pattern of 3. So it'll be 3 3 3 3 and 3, and that's how to discern between the bearish ending the ending diagonal and the leading diagonal. So I think we've got a leading diagonal here. So you can switch back on now. You don't have to listen to that little class in ending and leading diagonals. That's over now. So I think we've got a wave 2 underway, maybe a possible A wave at today's high with a B wave underway. So on Monday we'll be looking for this B wave to complete and a rally up in wave C again. But we'll track that. We're probably looking at maybe Tuesday or Wednesday for this pattern to complete. Okay, and then we'll be looking for a bearish signal again off that high. Let's move on to the S&P. Here's the 4-hour chart in the S&P. I'm willing to stick with the previous wave count in the S&P for a number of reasons. We didn't get the blow-off rally that we got in the Dow, and we've got that bearish momentum signal, or these lower highs in momentum still in place. It's still possible that we get a further high in the alternate count, which would be a 5th wave, and that would target probably up about the 2900 level, maybe push to the 2950 level. But we'll see whether that develops or not. I think for now I'm going to stick with this count, the operating count, and I think the fact that we didn't get a further rally today, or sorry, over the last couple of days, does lean in favor of the bearish outlook. Okay, so I've switched around the internal labeling slightly because I think this rally in wave C counts as a 5-wave structure rather than a 3-wave structure. So I think that fits a C wave. So we've got an expanded flat C wave, even though wave B here is hard to count in 3 waves. However, we can still look at this as 5 waves down and 3 waves up, which needs to be confirmed early next week. I think in the short term, the level to look at is obviously the previous low, the recent low there, 2800. But if we get a break of that previous 5th wave there, that wave 1 low, 2819, that'll be a nice something to watch out for. And again, we have a further lower highs in momentum. We have completing patterns. We have significant resistance dead ahead, and well, we're selling down slightly on Friday. It's off the highs again as we close. So next week could well be a pivotal point for the S&P, and we may be ahead of the curve on the S&P in comparison to the Dow. So let's see how that works out next week. So that's the outlook for the S&P early next week. Let's move on to silver. Silver had a sharper bounce than gold. It also had a sharper sell-off before that. We reached previous support, which was the previous A wave, way back there in July 17. So we've taken a year to go absolutely nowhere in silver, and I think that's probably the definition of a correction right there. So we've had a decent bounce in silver, probably the best in the last 2 months anyway, and I think we could probably look fairly bullish for next week. So let's get into the short-term pattern. We had a complete 5 waves down. We were looking at this contracting triangle again and looking for a kind of a spillover into a 5th wave. We got that. We got a clear internal 5 waves, and we got a bounce off the lower trend line, and the bounce looks pretty impulsive so far. The price is moving up towards the previous wave 1 high there, which was 1480. So the price is closing quite bullish, which would lead me to believe that wave 2 is complete, unlike gold, which I think could probably fall in the second wave on the early trade next week. But suffice to say that I think we, again, kind of my eyes are open for a 5-wave move to the upside, and we've got initial resistance of 1550. So you'd be looking for wave 1 to possibly break resistance at 1550 first, and we'll look for a 3-wave decline off that to give us a bullish signal in silver, which is very much like the count that we're looking at in gold also. So that's silver taken care of. Let's move on to 10-year notes. We're looking at this triangle over the last day or two, and I think we've reached a low on that triangle, and we're closing out 5 waves with 1, 2, 3 contraction triangle, wave 4, and we should see early next week we should see a pop into wave 5 of C of a larger triangle, wave E. You can see that larger triangle there that's been playing out for the last 7 months now. So since the low in what do we call that, 22nd of February. So 5 waves in a triangle, A, B, C, D, and E, completing with a 5-wave pattern in wave C of E, and well, I should move that over there. Be a little more professional of me to have these charts finished before I do the video, but hey, that wouldn't be, I wouldn't live up to my reputation as the worst produced Elliott Wave video on YouTube then, would I? Okay, so the hourly chart shows a 5-wave pattern in wave C, and we're looking for a bounce into about the upper 120s, 120.70 or so to complete a minimum target to break of the previous wave A, so that'd be 120.58. So Monday, I think we should see that happen. At that point, we'll look for a turn lower again in Treasury notes. Okay, that completes this weekend's video. Wishing you all a great week and a good week next week, and a great weekend, forgive me. Godspeed, everyone. Stay safe, be good. Don't do anything I wouldn't do. Bye-bye.